What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis on Lululemon stock. This has been a stock that I started buying a couple months ago. I have 10 shares at $165 a share, and recently they reported earnings, and the stock went up quite a bit. The stock was up about 10% today, so that's the good news here. But we're going to go through and do some quick analysis here to see, is this stock a buy? Is it a sell? What's my plan with the shares? So the first thing I did was I asked Gemini here for a stock analysis. Okay. So the latest earnings report, we have net revenue of $2.6 billion. Now, I believe if we check real quick on this an analysis chart. Yeah, so their calendar is a little bit off, but net revenue $2.6 billion. Analyst forecast was 2.48, so they beat that. Year over year change up 7%, very nicely. Key takeaway here is they beat expectations, and the growth was entirely driven by international, which is a very important part of this. We're going to come back to that in a minute. Diluted EPS $2.59 when 2.21 was expected. Very nice beat there. However, I'm always more concerned with what is the year over year change. So the year over year change was that it was down 10%. That's not good. But see, although that's not good, it's understandable because there's tariffs and stuff going on right now. So decline due to margin contraction, right? And that's mainly because of the tariffs. America, this is also a very important section. America's revenue down 2%. The sales in Canada and North America, South America down 2%, declining sales and soft consumer demand in core markets. However, international revenue is up 33%. That's what's driving this business right now. Massive growth, particularly in mainland China, which was up 46%. That's the insane part here, and that's the thing that's hard to come to a conclusion about is that China's growing so fast for them, but America is declining for them. Gross margin of 55%, significant contraction due to higher tariffs and increased markdowns. Okay. So we come back down here. Let's see. The growth outside of the Americas remains the primary success story. Comparable sales in the Americas fell by 5%. And I thought, this is interesting to think about. The slowdown in US and Canada is the biggest current challenge, suggesting brand fatigue, a saturated market, or a pullback from the premium consumer. I definitely think there is a pullback from the premium consumer. I think consumer spending is weak, and their consumers are being a little bit pickier right now. The economy is definitely not in the best place as far as consumer spending goes. And then in terms of brand fatigue and a saturated market, those could both be true. There's a lot of competition, and maybe Lululemon isn't as a premium of a brand as people looked at it, like how they looked at it like 5 to 10 years ago. So that is a valid concern. And then a saturated market is also a valid concern. So those are things to consider. It doesn't make me want to sell the stock right away, but it's something to think about. Then we have the tariffs and the markdowns, which again is not a good sign, but you kind of just got to ask yourself, is the China growth outpacing the slowdown over here in North America? The company raised its full year revenue and EPS, which was very nice. Furthermore, it authorized a $1 billion increase to the stock repurchase program, which means they're rebuying back over $1 billion of stock. Now, that's a lot for a company that was just trading at, a $23 billion market cap. That's like, well, that's what, at least 4%. That's going to be at least a 4% increase in the stock price just from them. So that's a big deal. What else do we got here? I also like this. Lululemon maintains a world-class balance sheet with approximately $1 billion in cash and no debt. So that's very nice. The shift to an international focus is paying off. They've been talking about this for years, that they're trying to focus on these other markets. China mainland is now the second largest market and is accelerating rapidly, providing a high growth offset to the Americas slowdown. Lululemon maintains premium pricing power and strong brand loyalty driven by its proprietary science of feel, technical fabrics, and product innovation. My thing with you always have to look at what is the moat of the company. Is there something in place that keeps them either having pricing power or keeps them with a loyal customer base or something to just provide a moat to the competition? And if you're an expert on clothing and Lululemon and all that stuff, please comment down below what your thoughts are on this. But if they don't have that, then it's kind of it's not a very good business then if you don't have that. The current stock price to earnings around 13 to 14, which is incredibly cheap, right? Let's look at the history of the P ratio here. In the last 5 years, this stock has been usually it's been around a 45. It wasn't until this past year or two that it's been trading in like around the 20 range. Normally the stock is in the 40s and the 50s. Okay. But these last couple of years, it's just been downtrending and downtrending now for over 2 years now. It's been downtrending. And 2 years ago, it was a 50. Now we're down to a 12, right? So that's what makes me a little bit more, I feel a little bit safer investing into this. It makes me a little bit more bullish buying the stock, at least, especially when I was buying it at 165. I don't know about at 205 now, but at those cheaper prices, I felt a lot safer because you're not taking much risk when you pay 12 times earnings. Unless the company is like for sure going out of business, then of course you don't want to be involved regardless of that's why the valuation trades at that multiple. Look at Walgreens is a good example because I used to buy that stock because the valuation was cheap, but guess what? The business was not doing well. So is Lululemon in that position? Not yet, not yet, because look at revenue. Their sales are doing fine. They just they're averaging what? They're doing 10% a year, right? What are they supposed to do this following year? Only 4 or 5%. So that's not good, but they're still growing. Sales are growing. It's just net income is kind of flat. We haven't seen any steep declines yet. Free cash flow is declining though, and being that the tariff situation is the main problem for them as far as margins go, I don't think these heavy tariffs are going to last forever. So once that changes or gets, resolved in some way, that's going to help out their business. Okay. So those are the things you have to look at. Shares outstanding, again, they're buying back a good amount here. 3% per year. That's good. That's helping out the stock price. So I like that. What else do we have? Oh, they're getting a new CEO. You could look at that as a good or a bad thing. It's uncertainty, but it could be a new leader is what we need, right? That could be a good thing. So the way I look at this is I thought about selling today, but I don't think I am. I'm. I don't think I'm going to sell yet because the way I look at it is I don't see it going back down to my cost basis. I see it maybe it comes down to like 190 or something, but I feel like that would be the bottom for it. Now that their numbers are what they are, I would say we're in a new bracket here, a new category here where now like 190 is the bottom and maybe the stock goes to 230 or 240. I don't think that's out of the question. I mean, look at the 5-year chart. For a long time, I mean, this stock had like 280 bucks as the bottom practically. And then it would come up to these $400 plus ranges. So I think there's a lot of potential here. But for the last 5 years, this stock was mainly trading at about 400 bucks a share. And it's only half of that right now. So all you need is a little bit of good news. I mean, what if they buy out another company or something? Or what if they get a big deal or something like that happens? Then this stock might shoot up another 15%, right? So I think I'm going to hold into my shares here. I'm going to watch this closely. But I will, for the foreseeable future, I will hold on to these shares. So that is my analysis. Let me know what you guys think down below.